Good morning, traders. My morning video, real quick here. So some things I'm looking at here is the bond market here. I was seeing signs to finish off last week that we were starting to see some positive divergences on the price action on the uh, ZNs. I'm just going to stick with the 10-year notes here, suggesting that we might need a pause or possibly a little reprieve in the uh, uh, destruction in the bond market, which is really unprecedented. Okay, if you put a Fibonacci extension on here from this recent breakdown, come down into the right here, get multiple touches there, and then I'll zoom in right here, right real quick, show you what we've done here. So basically, we came down, you did this breakdown from that pattern, come down, did a 61.8, wicking off that, they're finding a little bit of support right here on that 61.8. Typically, what you would look for, because we broke down there, we'd be looking for 100% completion of the pattern. So technically, the bond market shouldn't be done to the downside. Okay. With we'll see what happens. But like I said, we were seeing some positive divergences. So this rapid move down, we could very easily be coming back up for a wave four type relief rally for a possible to end it here still yet this year to the downside on the bonds. So that's what I'm looking at here on the bond market. When I use volume profile on the bond market, it does not look like it's exhausted to me. We got a double bottom in right here. It just doesn't feel like we have an exhaustion sell off in the bond market. If you look at the volatility, add volatility to your charts. We're not in, and we're elevated. Uh, let's see if I can find the study. Okay, real quick here. 1 second here. Let me pause it and then I'll find it real quick. So what I want to really point out here on this implied volatility on the bond market, like the 10-year bonds here, real quick. Uh, we're we're nearing what has been higher areas of the implied volatility. It looks like a bull flag happening here on the implied volatility on bonds. Uh, so it suggests to me the bond market sell-off is probably not done on a daily time frame. I do want to point out today is a national holiday, Columbus Day. The banks are closed, the bond markets are closed. So we had really thin trading there Friday on what was going on in the bond market. We had a little short squeeze in the equities, and it was trying to support the bond markets as best it could. Uh, I just definitely want to keep this in mind. I don't think the final low is in on the bond market, but anything can happen. So other things that I have been looking here on TLT. So I was really tracking this all day Friday. We broke down after that news came out on that jobs data Friday. And even right now, we're still hovering below critical support on the bond market. So the entire overnight inventory, we're still having trouble getting back into prior support on the bonds. So I'm keeping a close eye on this. The bear case is still, we got a double bottom in down here. If you go on a bigger time frame, you'll see what I'm talking about. Uh, we're starting to see a little bit of positive divergence at this double bottom. So we got a double bottom here at critical support, as that was a critical support area. Double bottom, showing some positive divergence in the move down here, suggesting at least in the short term that we have uh, exhaustion here on the bonds. So things happening this morning so far that I'm seeing. We've got a little bit heightened volume here in the mini NQs. I'm showing the NQs itself. This is the one I typically use. Um, so quite a bit of volume hitting the tech land this morning. We showed relative strength the past few days in tech. If I go ahead and show you some of the charts, like Meta broke out of a critical wedge. Let me go here on the bigger time frame so you can see what I'm talking about. Meta broke out of a critical wedge formation, day one breakout. Google, critical breakout. Okay, so that we're basically on the verge of going back to recent highs. Uh, Microsoft, a really nice breakout there Friday. Uh, so basically, we got a prior pivot over here. So we broke right above this pivot Friday, took off to the moon. We're still trading above it right here. See, Tesla, I think still, yeah, Tesla right on the verge, downtrend. Tesla's right on the verge of a continuation breakout, possible potentially here for Tesla. So this one here, we still haven't gotten through this pivot area. This is critical. So, I could definitely see a back test early on this week of the 267, 268 area, back testing these lows. There has been prior resistance here on Tesla. You can just draw a chart real quick here, or a line on this real quick. That, that's that. We are trading this morning right below that trend line. So keep that, be mindful of that. We are trading back inside underneath that trend line. So we don't want that to become a failure pattern. But we are coming into the apex. Uh, that's another thing we got to think about. We are coming into that apex. I would lean to think that this is going to be more bullish than bearish. And I'm looking for a lot of these gaps to fill, these gap downs this morning. AMD, major breakout of a downtrend. One of the strongest chart patterns. I was stalking it, and I missed it Friday. So unfortunately, that was one of the strongest chart patterns. We got Netflix in about a week for earnings. Okay, so we want to keep this one on watch here. Netflix for a possible breakout going into earnings. So I definitely have this one on watch for a potential. So you can actually put a little downtrend on that one. So it just wasn't quite ready yet. So we're going to come in today, possibly breaking out of a potential downtrend scenario with less than a week to go for Netflix. Other chart patterns that I'm looking setting up here, Boeing. Boeing, we got this accelerated downtrend into critical support down here on Boeing. You're just a few weeks out on Boeing. This is typically, historically, buy the dip zone for Boeing. So I'm watching that one. Another one, Disney. Uh, Disney, we just broke out. This thing here has been decimated since earnings. Not one of my favorite chart patterns. We're still, I don't like how these pivots, this pivot and this pivot high, this is a lot of congestion here, so not really one of my favorites. I like Boeing better. I prefer Boeing over that one. Okay, so that gives you some idea. Go over to ES's. Let me go over here on my other chart real quick. Try to cut this short here. ES, maximize. Some things I'm seeing on ES's. Uh, so just like the other, ES is pulling back. See, we got this gap down. I'm looking for these morning gaps to all get filled. So that's my primary thesis this morning. We're going to probably fill most of these morning gaps. Okay, we are holding above the critical pivot, above the yearly VWAP. We're right at the yearly VWAP. Okay, so uh, I would still have to lean for the gap fills today. Okay, other things that are happening in the market today. That's crude oil. Uh, they're probably going to fade crude oil early on in the session this morning. If I was a betting person, crude oil it has volume, but given the nature of the news that we had out of Israel, I would expect a crude to be a much stronger volume early on this morning. Okay, so uh, what I would be looking for here on crude. Um, Let me go down a smaller time frame. We got this gap. You know, I'm not saying that's going to happen. So we do have these prior highs. I'll watch this. So we know already, you can put an alert right there. If we start losing that, then it's probably going to fade into that gap. So we're already testing that that first pivot, that first primary pivot. So let's possibly fill some of this gap this morning here on crude oil. So initially, what you're looking for um, in these pop up Sunday night pops this morning. So we opened right there last night. The algos initiated selling pressure given the news from Israel, and we've just flatlined since. And what we're seeing in the overnight session, the profile that pretty much the way we closed Friday, the relative strength is still the same after the news came out. So we got relative strength in tech. Okay, you got S&P's next, the Dow Jones next, and the Russell next. So the Russell and Dow Jones were really mixed there on Friday close. But that gives you a little bit of idea on relative strength going into the session. Seeing the NASDAQ, there's still, in my opinion, a risk on atmosphere going into the opening session this morning. That lends me to think that we're going to fill the morning gaps. Okay. Let me think here. Is there anything else I want to talk about this morning? Okay, one major area of contention. We're a little over a week, or about a week out here from the bank's earnings to maybe the end of the week. I can't remember. To really start hitting the tape, and a lot of times these banks, to keep from shocking the market all at once, they will pre-announce some sort of write down or change to their financial standing, and we know that these banks are taking a major hit on the bond markets, and we're coming right off the lows of the bonds here. So we might be in today's session early on pre-market hearing some sort of news events about these banks writing down uh, uh, or giving warnings because of what's going on with the bonds. So be mindful of what's going on here. We're currently very weak on financials. Uh, it really looks to me like we're coming off of a lower high that we could actually free fall here into the 3150, 32 area in a heartbeat on some sort of news event in these financials. So very dangerous situation going into today's session in regards to the financials. So just be mindful of that. I mean, it does not look like a completed pattern. If you put a fib extension on this, bring her down here, looking for 100%. 100% puts us down here. We have not. It does. This looks like it's bear flagging to me. Um, Potentially bear flagging here on the financials. That is our dangerous signal in the markets, in my opinion. Final note here. That's the VX futures. So we are still trading slightly above the 200-day moving average on the daily time frame. If you go down to the 1 hour time frame, here is my warning. The more touches you have at a price point, the more likely it is you're going to break out of that price point over time. Okay, so now we've gotten 5 touches, technically 6. I almost touched 2, so 5 or 6 touches. So even more than that. So 1, 2, 3, 4, 5, 6, 7, 8. So we've got 8 touches up at this higher price point above the 200-day moving average on the VX futures. Now, I did mention in my last video that I was starting to see some exhaustion in the VX futures, which proved to be right Friday, okay? But I do want to point out, even this morning, we haven't given hardly anything up on the VX futures. And it's a warning that, uh, things aren't all hunky-dory in the markets. So if you're trying to trade for that upside gap this morning, good luck with it and stuff. But the VX futures are warning that there could be uh, a really quick move down to the downside. So just be mindful of that in your trading going forward today. Okay, that's it. Please like the video down below on YouTube if you can, and if you guys want to come into the Zoom room, yeah, our Zoom room, I typically have the link in my Discord. Just DM me, and I'll give you my Discord link, or you can actually join our Slack group as well. I'll need your email for that. Um, Either one. All of our services are free. We're just trying to make money for everybody and ourselves. So, if you guys are interested, just let us know.